Okay, financially, a couple of important pieces of data have come out over the last month. CPI report, Consumer Price Index, came out today, and it was right. Seth Kaplan joining us now. We talk to you so often, I'm like, okay, I forgot about Seth. Seth Kaplan, a local financial investor with Baird Wealth Management. I love talking to you because you kind of help paint the picture. These numbers have been good. Jobs report, now the inflation report today. And what else have we been missing here? What else have you noticed?
Some of the recent productivity numbers have come out in a positive fashion. Business costs are coming down a little bit.
Good.
And in essence, the productivity numbers show that each worker is more productive. So in aggregate, that helps the inflation picture.
Wow. Okay, so this is good news, especially going into next week. I know everybody's focused on Christmas, but if you live in the financial world, you're focused on one guy, Jay Powell and his crew from the Federal Reserve. They're meeting next week to talk about lowering interest rates again. With all of these numbers coming out favorably, or I should say right on target or favorably, does that signal the Fed reducing interest rates? It kind of looks like that's where he's going, right?
Yeah, I think it's worthwhile to think about where we started. After the large COVID inflation bump, rates got raised restrictively high. Since then, they've started to lower it, but they've been looking at the data coming out.
Yeah.
Even now, the inflation data is such that it is coming down, but it's kind of plateauing, but it is still somewhat restrictive in regards to where rates are. So it's likely that they'll reduce it probably next week, and then they'll continue to look at the data.
But the rate of decline is the important point. You don't want to drop it too fast, as that can hurt the economy. It's like that elusive soft landing. And that's what they're going for. So we're not going to see a dramatic swing either way. It looks like they might go down. And long term, we talk about this, October, September, sometimes November can be volatile months on the stock market. But I'm looking back thinking they weren't. In fact, we hit records, right?
Yeah, I mean, surprisingly, this year when we went through September, October, November being election month, it wasn't volatile, and commonly those are the most volatile months for the year for the stock market. This year, basically, the markets were very strong, and going into year-end, that's the momentum that we're seeing right now.
So it's positive, and so that means we're sitting in a good place. Is there some? I feel like there's a sneak attack coming that we don't even know it. Like, what do we need to be careful going into the new year? Sometimes when you are too relaxed, things can go wrong. Explain.
Yeah, I mean, interestingly, when it comes to the financial markets and economy, oftentimes they kind of move in opposite direction. When the economy is super strong, because stocks can get high and overvalued, that also leaves potential risks, so that if bad data comes out, there may be more downside. So at the same time, things are strong now. The economic backdrop looks attractive. The stock market's doing well, but at the same time, this isn't a time period where you would not want to get overly optimistic and complacent.
And because they say a lot of times when the stock market is volatile, that's the time when you can find a lot of deals. That's the time to be a mover or shaker. Right now, going into the new year, as long as everything stays the same, and it looks like hopefully it will, status quo, right? You got to be mindful and not make too many big moves.
At the same time, I always remind people the stock market is a place to invest capital with a long-term time horizon. If you're thinking 3 months out, 6 months out, really the stock market is a guess from that perspective.
Crystal ball. Long run, though.
Think long-term.
Yeah, exactly. That's the thing. So hopefully the numbers keep going our direction. And so going into Christmas season, I just want to, one last thing. We're in as good a condition as we can be, right? I mean, obviously things can always be better, but going into Christmas season, we're doing okay.
Yeah, I mean, as we've discussed before, our economy is primarily driven by consumers. It's roughly 70% consumption-oriented. When the unemployment rates are low, much like we're in today, that's a good backdrop for consumer spending, for holiday spending, things like that, and that's largely what we're seeing right now.
Seth Kaplan with Baird Wealth Management, thank you so much for joining us. Love getting your insight on everything, because I'm like, okay, wait, it was great.